For the first indicator, let's search for Optimized Trend Tracker. This indicator by Kivans Ozbilgic. For the second indicator, let's add heatmap volume. This indicator right here. And finally, let's add an indicator named HLC. This one by Jason Hadley. For example, if the volume in the market is higher than usual, the histogram will be either colored in yellow, orange or red. And these are the only times when we can take a trade, because we do not want to be entering the trades when the volume is low. Okay, now let's actually understand how to trade with this strategy. So we're only going to be looking to buy when the OTT indicator officially confirmed an uptrend. For that, the price action has to be above the purple line. The HLC indicator has to issue a new buy signal. This means that the background has to either turn from yellow to green or from red to green. And finally, to confirm the signal, the volume in the market has to be higher than usual. So just like I said, the bar has to be either colored in yellow, orange or red. And once we have these conditions met, we will go ahead and place a buy order at the close of our trigger candlestick. Our stop loss can either be set at the recent swing low or at the purple line, depending on which one of these two prices are closer to the entry price. And our take profit target will be set at 2 times the risk. If, for example, these two indicators are confirming a signal, but the volume is not quite there yet, we can wait for another candlestick for it to catch up, but the price action has to be closed at the same level where we had our initial entry. Exactly opposite is true for short trades. First, we need to have an official confirmation that we are in a downtrend. For that, the OTT has to issue a sell signal and the price action has to be below the purple line. The HLC indicator has to issue a new sell signal. This means that the background has to either change from yellow to red or from green to red, and the volume has to confirm the signal. Our stop loss can either be set at the recent swing high or at the purple line, depending on which one of these prices are closer to the entry price. And our take profit target will be set at 2 times the risk. Also, I want to give you some examples where you wouldn't have taken a trade. So for example here, the HLC issued a new buy signal, the volume agrees, but the OTT hasn't issued a buy signal yet. So in this case, you do not wait for it to catch up, you just ignore this signal altogether. Also notice this, around 95% of the strategies on YouTube would actually give you trade entries somewhere at this time. And only 5% of the strategies would actually avoid taking trades when the market is ranging. So you kind of have to get ready for not getting a lot of low quality trades. Also, if your strategy issues a signal to go long or short on a massive candlestick like this, you would normally skip this signal, because we want to control the outcome as much as we can, and these price movements are extremely unpredictable. And this is what I'm talking about. We see we had a signal to go long right on this candlestick, and we can see that this wasn't the best price to enter this trade. The same thing right here, and you already know what could have happened if we had taken that trade. The price would have reversed and stopped us out. Okay, I hope you have understood the rules for this strategy, so let's actually do our backtesting and see how well it performs in different market conditions.